1,000 points of service all over the country. And here you can see sort of the transaction distribution, both growth and distribution, over a 5-year period. The top numbers, the total number of transactions, from 560 million a year to 1.5 billion a year. And what you can see on the little growing segments on the bottom is the percentage of those transactions that are in deposits, withdrawals. You can start to see that as people get familiar with the access, they start to open deposit accounts and make use of the backbone for other kinds of financial services. But you can see that, of course, the simple transactions, the payment transactions, receiving money, dominate initially these services. Then over time, as people get used to it, you see credit added in, savings added in. And what your average transaction cost for a deposit account that's riding on the back of one of these payment systems is, of course, infinitesimal compared to the transaction costs of any of us who have people, coming for that sole purpose, to a cashier who may sit around half the day doing not much else other than waiting for a client to come in. Now, group programs are, of course, have their own special dynamic, but in terms of the individual programs, that's the way it kind of operates. So over time, we've been steadily pushing out our infrastructure into ever more rural, ever more community-based kinds of systems. And now, of course, there's great interest in, what's the role of cell phones going to be? How are we going to be able to connect to infrastructure that's actually out in the communities? And here's some data from the Philippines of sort of, what's the population for each bank, each branch, each ATM, loan officer, agent, and mobile. And you can see that there's a hugely improving ratio of sort of a connection point with a banking system to the number of people, going from one bank for every 2.2 million people down to one agent in one of these cash management outlets for every 141 people. And so that just starts to suggest that as you get the systems pushed out into communities, you have the potential for really, really driving down the transactions cost for people to quite low levels. And even the cell phone, you've got the view that pretty soon cell phones will be absolutely ubiquitous. The statistics show, big study here, over 90% of the poor have used a cell phone in the last 3 months. Nearly 60% can get to a phone in less than 5 minutes of our people, people we want to work with. 3 billion mobile phone subscriptions are today. They think there'll be 5 billion in a few years. So these are the kind of penetrations of connection points or possible connection points that could dramatically change our potential and the kind of costs that our clients have, both themselves and our cost of accessing them. And this is some of the ways in which recent growth in technology over the last 3, 4, 5 years could dramatically change our potential to offer services to lower income clients. And you see a bunch of models emerging around the world of sort of agents, cash management points in neighborhoods being sponsored, franchised by banks as outlets for cash management, for inputting or making payments out through the financial system. And you can see a number of these. You're all probably familiar with this. You see this sort of thing in the literature and in the conferences. And here comes back to the philanthropic purpose. Oftentimes, it's not actually very easy for our kinds of clients to use these technologies. They're tough. Their phones are limited.